We're seeing an 11% withdrawal demand.
This can't be right.
Welcome to Finance Today. Today we're watching private credit funds and investor withdrawals. Let's delve into these critical insights.
The data before us indicates severe, unprecedented risks in the credit market.
What exactly does that mean?
Volatility is spiking. We face a potential cliff.
What happens now?
The market is still sleeping.
ツマンおじ今日のニュースを読みます。Reuters, Morgan Stanley restricts redemption at private credit funds after withdrawal surge. By Mania Saini, March 12, 2026. March 11, Reuters. Wall Street banking giant Morgan Stanley has limited redemptions at one of its private credit funds after investors sought to withdraw almost 11% of shares outstanding, a regulatory filing showed on Wednesday. A flurry of bad news following several credit issues in recent months has drawn fresh scrutiny to the roughly $2 trillion private credit market as investors question the health of loan portfolios and the resilience of borrowers in a higher interest rate environment. Morgan Stanley Private Credit said in a letter to investors that the North Haven Private Income Fund, PIF, returned roughly $169 million, or about 45.8% of investors' tender requests for the quarter. The Wall Street powerhouse signaled that the private credit industry faces several challenges, including uncertainty around an M&A recovery, speculation about the credit deterioration, and the contraction in asset yields. Morgan Stanley said the PIF was invested in the 312 borrowers across the 44 industries as of January 31st, and that credit fundamentals at the fund remain broadly stable. As marketed and consistent with the disclosure in our private placement memorandum, we will be fulfilling the tender request for 5% of unit outstanding as of December 31st, the bank's investor management arm said in the letter. Morgan Stanley added that limiting withdrawals will help avoid asset sales during the period of market dislocation and maximize risk-adjusted returns for investors over time. Dispersion between stronger and weaker credit is increasing, it said. Private credit fear grows. Fears that AI could erode the earnings power of software companies and weaken their ability to repay loans are rippling through the private credit, a key lender to the technology sector, prompting investors to reassess the exposure, redemption risk, and fundraising prospect, analysts have said. Concerns have been compounded by renewed troubles at the Blue Hour over asset sales, triggering a sharp sell-off in shares of alternative asset managers with a footprint in the private credit market. Meanwhile, JP Morgan Chase has reduced the value of some loans to private credit funds after reviewing the impact of market turmoil around software companies. Two people familiar with the situation told Reuters on Wednesday. Analysts still point to JP Morgan CEO Jamie Dimon's warning in October of more cockroaches lurking in the credit market as a potential source of investor anxiety, even though the issues so far do not appear to be systematic. Earlier this month, BlackRock, the world's largest asset manager, disclosed that it has limited withdrawals from a flagship debt fund after a surge in redemption requests. Alternative asset manager Blackstone on March 2nd also disclosed that its private credit fund, known as BCRED, faced a surge in withdrawals in the first quarter. 以上です。